Income tax 2023-2024. Do you have to file? Get ready and some coffee so we can recognize the code cracks when doing income tax preparation 2023-2024. Most of this information can be found in Form 1040 Tax Year 2023 instructions, which you can find at the IRS website, irs.gov, irs.gov. The question, do you have to file? First, what we want to do is distinguish or separate the question of, do I have to legally file? Am I required to file the tax return? Versus the question of, would it be beneficial for me to file? Those are two separate things. When we're talking about the requirement to file, we're basically asking, if I don't file, will the IRS come after me for not filing, for not being in compliance? When we're asking the question, would it be beneficial to file? We're asking the question of, yes, will I be in compliance? That's good. But also, is there going to be a benefit such as getting money from filing? So there could be situations you can imagine where you're not required to file, possibly because your income is below a certain threshold. And if we have an income tax, you would assume that if your income is below, say, the standard deduction, you're not going to owe any money. And then possibly the IRS wouldn't require you to file because they're not going to get any money from you in that situation. However, you can imagine being below that certain threshold, but still possibly getting what we would call a refund, which would basically be more of a benefit program or a welfare kind of program situation, because you might be getting money from, say, tax credits, which are refundable. You might still qualify, for example, for an earned income tax credit or a child tax credit, which has a refundable component to it. And if you had work, you got W-2 wages, even if it was below a certain threshold, you might have had withholdings on it, which means the employer took money out of your wages, paid it to the government. And in order to get the refund of that money, typically, you would need to file the tax return, even if your income is below a certain threshold. Now, also note, there are generally free resources for especially lower income individuals. First, a word from our sponsor. Yeah, actually, we're sponsoring ourselves on this one because apparently the merchandisers, they don't want to be seen with us. But that's okay, whatever, because our merchandise is better than their stupid stuff anyways. Like our Trust Me, I'm an Accountant product line. Yeah, it's paramount that you let people know that you're an accountant, because apparently we're among the only ones equipped with the number crunching skills to answer society's current deep, complex, and nuanced questions. If you would like a commercial-free experience, consider subscribing to our website at accountinginstruction.com or accountinginstruction.thinkific.com so that you can file your tax return. And therefore, the general advice would be, if you should check it, you might as well check it out. You might as well see if you can get access to the free file tools and file, and then basically input your tax return to see if you have benefits such as withheld W-2 income, even if you have low income, or if you have access to possible credits that are refundable, such as the earned income tax credit or the child tax credit. Okay, that said, let's dive into it. So you can use charts A, B, or C to see if you must file a return. So from this perspective, must I file the return? Basically means if I don't file the return, will the IRS come after me? Different question from, would I benefit from filing the return? So U.S. citizens who live in or had income from U.S. territory should see publication 570. Residents of Puerto Rico can use tax topic 901 to see if they must file. So then tip. So obviously if you're outside of the United States, then you have tax treaties and whatnot, which complicate the matter. If you're a tax preparer, tax professional, that's another area of expertise that you might, if you're within that community, might focus in on, or if you're not familiar with those areas, might stay away from due to the complexity. So tip, even if you do not otherwise have to file a return, you should file one to get a refund of any federal income tax withheld, meaning if you had a W-2 employee, if you were a W-2 employee, you received a W-2, you have income that's low enough that you're not required to file, you still most likely had withholdings. So those withholdings should be refunded if you don't owe any taxes, which you would only get if you file the tax return. So you should also file if you are eligible for any of the following credits. So we've got the earned income tax credit. We'll talk more about credits later, but that's one of the big credits that have a refundable component to it for low income individuals. Complicated credit, but if you have access to it, great. And you have software these days that can help you to figure out what's going on with it. Additional child tax credit. So we have the child tax credit typically having a refundable portion to it, and that then might be able to get a refund or a benefit program through filing your tax return, even if you don't owe any taxes. American Opportunity Credit. So this is going to be an education type of credit, which again, you could get a benefit from even if you're not required to file. Credit for federal tax fuels. So another credit could have benefits for you. Premium tax credit, and then the credits for sick and family leave. So we'll talk more about some of these credits in a later section when we focus on credits in general. But the general idea would be, again, if someone asks you, should I file? You probably want to check it out. You probably want to get access at least to the free software if your income's below a certain threshold, and see if any of these things apply with the help and use of the software, which often walks you through an interview process in a similar fashion as a tax professional would, and that'll help you to hopefully see if these things apply and whether or not it would be worthwhile to file the tax return. So required to reconcile advance payments of the premium tax credit. So we talked about the premium tax credit. That's the one that's going to be linked to the health insurance. So we talked about the idea that in a prior presentation, that is back in the Obama administration years, they were trying to solve the whole health insurance situation. And we ended up with this situation where we have the health insurance marketplace. And with the health insurance marketplace, if your income is below a certain threshold, you might be able to get a credit with regards to health insurance to help pay for the health insurance premiums. And they wanted to then give you the credit in advance, not in dollars, but instead by reducing the amount that you paid for the premiums to pay for the health insurance, which means that now you have a prepayment, in essence, of the credit, which you then have to determine what the actual credit was when you file the tax return at the end of the year. So if you have that complexity in the return, then you're generally going to have to file the tax return because you've already claimed the credit. You see, because you got the credit, like for 2023, you got the credit already by paying for the insurance with the advance credit, meaning your insurance premiums were lower than they otherwise would have been. And then you have to actually but you haven't actually claimed the credit when you paid the insurance premium. You have to claim the credit when you file the tax return, which happens on April 15th of 2024 or by that date. So there's that situation. And then if your spouse with whom you are filing a joint return or a dependent was enrolled in coverage through the marketplace, so that's the terminology, which usually means that you're in the marketplace, and therefore they possibly calculated the credit in order to have an advanced payment that they use to pay for, in part at least, your insurance premium. For 2023, advance payments of the premium tax credit were made for the coverage. You must file a 2023 return and attach the Form 8962. So then you're going to have to reconcile that situation with filing the tax return to see what the actual credit was, and so on. You or whoever enrolled you should have received Form 1095A. So that's the scary form. When you see that, you're going to go, oh no, there's a marketplace prepayment credit thing I've got to reconcile here. Here we go. We'll talk possibly more about the credits later in a future section, but from the marketplace with information about your coverage and any advanced payments. So you must attach Form 8962 even if someone else enrolled you, your spouse or your dependent. If you are a dependent who is claimed on someone else's 2023 return, you do not have to attach Form 8962. So exception for certain children under age 19 or full-time students. So now we're getting into the situation of when you file the tax return, we have an income tax type of system. And generally that's going to be applying to people that are earning income. But what about basically people under a certain threshold, or basically dependents situation? And then you get into questions about who qualifies as a dependent, which we'll talk about in future presentations. But under a certain age, typically a dependent, especially if they're a child or relative, we'll talk more about those later. And then if they're a full-time student, you can have a higher, basically, age requirement. So exceptions for certain children under age 19 or for full-time students. Okay, so if certain conditions apply, you can elect to include on your return the income of a child who was under age 19 at the end of 2023 or was a full-time student under age 24 at the end of 2023. To do so, use Form 8814. If you make this election, your child doesn't have to file a return. For details, use the tax topic 553 or see Form 8814. So in other words, the child has income. So now the child would be subject to taxes, but the child is a dependent. The question then is, should we be able to claim the income on the parent's tax returns, in which case the child would generally possibly not have to file in that case because the income would be claimed on the parent's return. So again, we might touch on that in more detail in future presentations, but you can drill down on the instructions for Form 8815 in tax topic 553 or for more information. So a child born on January 1st, 2000 is considered to be age 24 at the end of 2023. Do not use Form 8814 for such a child. So you often have these cutoff dates that are somewhat arbitrary to the government, and you've got to make sure that, when we're talking about are they at a specific age, when exactly is the cutoff date. So resident aliens. So these rules also apply if you were a resident alien. Also, you may qualify for certain tax treaty benefits. Generally, you are a resident alien if you meet either the green card test or the substantial presence test for 2023. So in those instances, you can see publication 519 for details. This is another area where, when we're talking about aliens, resident aliens, where if you're in a certain community, that might be a place of specialty that you can kind of focus in on, because certain things are going to be specialized to that area in the tax law. Or again, they might be areas that you're not familiar with, where you might say, I'm not going to go into those areas because that's not my area of expertise, and be able, again, to manage your clientele and not have your clientele manage you. So you say, I'm not doing that because that's not my thing. I'll recommend you to other people for this, that, and the other. This is my business. This is what I'm focused in on, and so on. Non-resident aliens and dual status aliens. So these rules also apply if you were a non-resident alien or dual status alien, and both of the following apply. You were married to a U.S. citizen or resident alien at the end of 2023. You elected to be taxed as a resident alien, and you can see publication 519 for details there. Caution: specific rules apply to determine if you are a resident alien, non-resident alien, or dual status alien. So there's, again, some of those specialty kind of areas if you're in communities where you're dealing with these more specific tax laws, which again have all their complexity in and of itself, right? So most non-resident aliens and dual status aliens have different filing requirements and may have to file Form 1040-NR. Publication 519 discusses these requirements and other information to help aliens comply with U.S. tax law. So here's some of your charts. Here's chart A for most people. So if your filing status is, you have the statuses single, married, filing separately, head of household. We'll talk about the filing statuses later and what qualifies for them. And at the end of 2023, you were on the age limit under 65 or older. Then file a return if your gross income was at least $13,850. Or 15,700, and then married 27,729 too. Now again, these numbers have to do with whether or not you have to file, noting the exceptions that we talked about before and some that are going to be linked down here. I won't go over this whole chart, but the general advice normally you would give someone is, why not check it out, right? Use the software, use the free tools to see if it would be beneficial for you to file because of some of the things we talked about above. So chart B, for children and other dependents. So if your parent can claim you as a dependent, use this chart to see if you must file a return. And this chart, unearned income includes taxable interest, ordinary dividends, and capital gain distributions. It also includes unemployment compensation, taxable Social Security benefits, pensions, annuities, and distributions of unearned income from a trust. Earned income includes salaries, wages, tips, professional fees, and taxable scholarship and fellowship grants. Gross income is the total of your unearned and earned income. So why is that important? Note that if you're a dependent, then certain tax planning strategies could be put in place, right? You can imagine that wealthier individuals would say, hey, look, it would be great possibly if we can get rid of or remove ourselves from some of these higher income thresholds because we're in the higher progressive tax brackets. If we can shift some of the income to the children and have them file a tax return in the lower tax brackets, then that would be an effective tax strategy, right? But part of the problem, so then the IRS is so there's back and forth on that whole issue. So when you're talking about income that wasn't earned, like dividend income and interest income, that would be income that you would think would be easily shiftable and have a different kind of situation where you're just using the child, possibly trying to get a tax benefit. So that's why you can have different rules possibly versus earned income, where say the child was an actor or something, or they're in movies or something like that. Well, now you have W-2 income, which they actually earned. It's not like the parent just gave them money that then earned interest. No, they did their own work, and earned income, even though they are a dependent possibly. So then chart number C, other situations when you must file. You must file a return if any of the conditions below apply for 2023. Number 1, you owe any special taxes, including any of the following: alternative minimum tax, which is usually for higher income individuals, additional tax. B, additional tax on qualified plan, including an individual retirement plan or other tax-favored account. C, household employment income. D, Social Security and Medicare tax on tips you didn't report on your employer or on wages you received from the employer who didn't withhold these taxes. Those are basically payroll taxes, and tips complicate the situation sometimes with the payroll taxes. So uncollected Social Security and Medicare or RRTA tax on tips you reported to your employer or on group life, term life, and then recapture taxes. And then 2, you or your spouse have filing jointly received health savings account. That's an Archer MSA, Medicare Advantage MSA distributions. 3, you had net earnings from self-employment of at least $400. That's pretty low. That's going to be like a Schedule C type of situation. The IRS wants to see your income statement, in essence, on the Schedule C. 4, you had wages of $108.23. It's funny when you see these kind of numbers because they're probably numbers that happened a long time ago and have not been increased with inflation, right? So you get these really kind of funny, low or weird looking numbers. Or more from a church or qualified church-controlled organization that is exempt from employer Social Security and Medicare taxes. 5, advance payments of a premium tax credit were made for you, your spouse, or dependent who enrolled in coverage through the marketplace. So there's our marketplace situation again for the health insurance. So you or whoever enrolled you should have received Form 1095A. And 6, you are required to include amounts in income under Section 965, or you have a net tax liability under Section 965 that you are paying in installments under Section 965H, or defer by making an election under Section 965I.